and welcome to FIRSTtalk, where we simplify super. Today I'm joined by Jason, Peter, and I'm Andy. We're from the Financial Advice team, and we're going to be talking about the carry forward rule. So Jason, tell us a little bit about the carry forward rule.
Yeah, so the carry forward rule refers to what we call, or relates to what we call concessional or pre-tax contributions. Generally, there's a limit of $27,500 per financial year what you can contribute to your super. Carry forward rule actually lets you go over and above that amount.
So before we move on to going above that amount, let's just clarify, what is a concessional contribution?
Good question, Andy. Concessional contribution is your employer contributions that your employer makes into your super fund, any salary sacrifice contributions that you make, and also any contributions that you claim as a tax deduction. They make up your concessional contributions.
So those three types of contributions, to your point, in this current financial year, can't go above 27.5. So how is it then Jason is saying we can use this carry forward rule and actually go above it?
So the government at the start of 2018-19 allows you to carry forward any concessional contributions you haven't used to the full cap.
So maybe give us an example of what Peter is saying there. So we're going back to 2018-19 and we're looking at this financial year. So how is it I can use this unused component?
Yeah, so you might not have made some additional contributions. You might have only, made $10,000 each financial year over the last few financial years. So if you haven't used around about 17.5 last financial year, let's say, that can carry forward, and then that gets added to on top of your normal 27.5. And creates an additional amount that you can contribute into your super.
And do I have to use it this financial year?
No, so it works on a rolling 5-year basis or 5 financial year basis. So you've got a few years that you can use it and utilise it to your benefit.
We're not up to 5 years yet though, so how does it work in that respect?
Yeah, so the government only went back to 18-19, so we're not quite there yet, but we will be going forward and using that 5-year period going forward.
And is it available to everyone?
No, so you must have, and this is the major criteria, you've got to have less than $500,000 in your total superannuation funds, all combined together, as at 30 June the previous financial year.
So, and whereabouts do I go to find out about this carry forward rule?
Yeah.
How much I got?
Yeah, so the ATO does actually, on your MyGov that you can log into, provides what your carry forward was at the start of the financial year. So that's a good source to go to.
And what's the issue around looking at the ATO website?
Yeah, you've just got to be careful because based on timing, the super funds don't report to the ATO on the day. So you've just got to be careful about when you access your MyGov account. Generally by 31 October, all your contributions for the previous financial year will appear on your MyGov site.
And you might as well, you might be in December or something like that. So it'll, again, have it from 30th of June last year, but it won't have what you've done the last few months.
Yep.
Yeah. So, all right, so if I'm a member and I'm logging on to the ATO website and I'm looking at my superannuation account and it says, oh, you've got to carry forward amounts of $40,000. Starting with yourself, what's the way I could use that $40,000 then?
Yeah, so you could look for it, if you've got the cash flow, you could look for it over the next few financial years. You could start to salary sacrifice a little bit more or make some contributions and eat that up over those next few financial years as you may get closer to retirement. You're trying to build that super balance.
So what would be the benefit of using it? Like you say, on the next year by year, over the next 5 years?
Yeah, you're sort of building your super up slowly and getting it there, and you're getting some of the effects of compound interest. And you're getting the tax savings each year, so you're getting a nice benefit each year on it too.
Okay. Is that the only way?
No, you can also bank it. So any unused amounts that you have each financial year, you can bank into later years. I've got a woman that I'm talking to at the moment who will be selling an investment property in the next few years when she retires. So in her case, we're going to bank any unused amounts, and then when she gets a lot of income because of the capital gain on the property, we're going to use that as a way of actually, or the carry forward rule as a way of reducing her income in that one fell swoop in that one final year.
So, I mean, that's great if someone's got an investment property and how to minimise some of the tax there. But what's other ways that maybe people could bank it and use it?
If people are leading up to retirement, if they're retiring at the start of a financial year or sort of midway through a year, they're not going to earn very much income. They might think in that final full year's worth of income, let's just use or take advantage of the carry forward rule and really reduce our tax bill for that year leading into retirement or before retirement.
Okay, excellent. So, I mean, you mentioned before about using it on a year-by-year basis, and you actually was talking to a member just recently around that. Do you want to kind of explain that?
Yeah, so the member actually didn't work for 2 years. He got paid a redundancy and stuck around the home and did some improvements. So he basically had all this cap that he'd used out, and he was working for another 3 to 4 years. So basically what we said was, well, let's just use all that over the next 4 years, build your super up, save you a heap of tax in the lead into retirement, and you'll be fine, have a nice, comfortable retirement after.
So with this carry forward rule then, the keys to it is that your superannuation balance, first of all, has to be below 500,000 as at the 30th of June or the 1st of July. You can go onto MyGov ATO website and it will let you know how much you've accrued, and it will show you there how much you can actually use in future years. And to Peter's point, you can either use it in the next 5 years and bank it up to offset a large tax payment that you got due, or minimise that, or you can use it on a year-by-year basis and increase your salary sacrifice contributions and minimise your tax each year over the next number of years. So if you want to find out more about the carry forward rule, like I say, by all means, go onto the ATO website. You can also look on our website, there's information there, and you can also talk to our contact centre and our local coordinators that can explain this concept like we've done here today for you. But if you want to work out how to effectively use it in your personal circumstances, that's what Peter, Jason and I from the Financial team are here to help you do in those regards. So again, thank you for joining us today, and until next time.